Hi, this is Ken with Silverado Mortgage, and I'd like to talk with you about the removal of PMI or private mortgage insurance from your home loan. If you're making a monthly payment and that includes PMI, that private mortgage insurance, by removing PMI, you can stop that portion of the expense, and it may represent a reasonably significant amount of money over time. So you're going to want to stop the PMI payments as soon as you're eligible to. There are two methods for the removal of PMI. One is the automatic method. The other is the petition method, where the consumer contacts their lender and specifically asks for the removal of PMI. Under the automatic method, it's simple. Your lender will remove it if you're on time, you're not delinquent on the mortgage, and your loan reaches 78% of the original amount based on the appraised value or purchase price, whichever was lower. That 78% loan to value is what the lender's looking for, and that's when it's scheduled to reach a 78% loan to value. So it's actually a date on the calendar, and that's determined right up front as soon as you purchase the home. That 78% loan to value would be calculated from the amortization schedule. The date that occurs is set on the calendar, and that's when your PMI can be removed. So accelerating the payback of your mortgage does not accelerate the 78% loan to value for automatic removal purposes. It's a date on the calendar. It's not actually when you're at 78% loan to value. It's when it was scheduled to reach 78% loan to value. So that's the automatic removal method. The other way of removing PMI, and the most common way, is to petition to the lender and request in writing that they remove your PMI. If you do this, there are a couple of things you need to be aware of. You've got to have an on-time payment history with the lender on your loan, and what that means is no late payments 30 days or later within the past 12 months, and no payments 60 days or later within the past 24 months. So by definition, in order to have an on-time payment pattern for the removal of PMI, you must first have had a 24-month history with the loan. So you can't remove PMI sooner than 24 months. So that's one consideration. Another thing is that the lender is going to determine that you've got an 80% loan to value on your property. That can be 80% because you've paid the mortgage down. That can be 80% because you've just made the scheduled payments and it's now reached 80%. But this 80% is based on the original purchase price of the home. And that 80% position will be confirmed by the lender with a fresh appraisal or fresh determination of current value for the home. So if your home has dropped in value, you may not have that 80%, which would then allow the lender to remove the PMI. The lender may hire an appraiser. They choose the appraiser. You pay for the appraisal. So there's that cost for removing PMI. I hope this is helpful. If you have any questions, feel free to give us a call at Silverado Mortgage. Thank you. Oh, and one more point regarding the removal of PMI. You cannot have a second mortgage loan on the property at the time that the lender removes the PMI. Cannot have a home equity line of credit on the property at the time that the lender removes the PMI. Be aware.